Well, regional bank shares surging on those comments from Treasury Secretary Yellen. My next guest says the bank industry is well capitalized and calls the broad sell-off an opportunity for long-term investors. Let's bring in Fred Cummings of Elizabeth Capital Management to talk more about that. Fred, it's great to have you. So clearly, whenever you have banking stress, when you have institutions that fail and you have fast-moving deposit flight, people naturally are going to wonder just exactly how pervasive these issues are. How can you offer some assurance that, this is not going to be a game of waking up every day and finding some other bank or several banks in a similar position?
Well, first and foremost, investors and consumers need to understand that this is really a crisis of confidence. When you look at the fundamentals of the banking business, banks have near record levels of capital. They have very strong liquidity, and they're entering 2023 at record levels of profitability when you look at return on average assets. And more importantly, we've been in touch with a number of our portfolio companies, as well as listening to conference calls with managements across the country. And the message is the same. Their customers are not panicking. We are not hearing that the banks are experiencing outsized deposit outflows, and that gives us a reason to be optimistic. And I think once we get to earnings season, that same message will be communicated throughout, and that should help to restore confidence in the banking sector.
How do you treat, Fred, these estimates that now are making their way around, this new attention on sort of paper losses on the books of banks from longer duration fixed income securities and loans and things like that, and stress testing each bank, in a sense, on our own for whether they can get through this if forced to sell? Because that seems to have been the game when people were panicking about these stocks.
Yes, indeed, and a number of people have talked about it, and I wanted really to address the misperceptions out there with regards to banks' inability to sell their available for sale security portfolio and remain well capitalized. We looked at the 127 banks that comprise the S&P Regional Bank Index. What we found was that if all of those banks sold their entire available for sale portfolio, only 9 would drop below the well-capitalized threshold of 7% common equity Tier 1 ratio. And so that's a relatively a low number, and that really speaks to the strength of the capital bases of these institutions. And more importantly, the banks are not going to have to liquidate these securities, particularly now that the Fed has structured that term a lending facility. But that was a misperception on the part of a number of investors. And so we looked at the numbers, and that's the conclusion that we drew, that banks could easily sell their available for sale portfolio and remain well capitalized.